In this video, I want to talk about inverse head and shoulders pattern. I sent an email yesterday a little bit about that. You can do more research on it. So I won't get into all of that, but I want to show you some of the trades that I placed last week with the inverse head and shoulders, why I like this particular pattern, and kind of the results and so forth. So we're looking at August 9th. This is a 1-minute chart, as you can see. The markets are, this is the Dow, markets are going down, so at any point I'm going to be looking for a potential bottom and drawing. What I do is draw circles in NinjaTrader. So that first circle there here that's a potential low, so this one could have been it as well. I might have had it there, right? I might have had it there when it was there at that point, but then it broke the low, so then now this is the new spot, right? So we're the inverse head and shoulders is kind of looking for the market's dropping, where is it going to stop, and can I profit once it decides to go back up? So this particular case, that is you're looking for a shoulder. It's called a shoulder first. So your first drawing in this case is a shoulder, and I draw the little circle like that. The next thing you look for is a neck. So that's kind of the high. So I draw a circle there. That's the high. So the next thing you would be looking for would be the head, which would be lower than this shoulder. So if we continue, we get that. Kind of happens here and happens farther and farther and farther and farther and farther. And finally we get an endpoint here. So that's our head. Okay, so the next thing we're looking for is a neck. So it goes shoulder, neck, head, neck. So we're looking for that, and you can guess based on the trend line that's already there, that's where it is. So that is your neck, your second neck. So once it breaks, once we get another shoulder, and then it breaks that neckline, is the neckline, we will have a potential trade. So now we got to find the shoulder, right shoulder, and you can see it right there. Could have been here again. If you go back, I could have drawn it right there, and then I'm looking for the break. Never did break, so that this ends up being the right shoulder. So at this point, you're like, okay, this is either going to be the right shoulder and we're going to break higher, or that's not going to be the actual shoulder and it's going to keep falling, and I'll have a different shoulder. As long as that shoulder is above the head, we're okay. So if it came all the way down here, that would have been fine. And this shoulder would have been there. All that matters here is the neck. So once it breaks its neck, that's when we have the potential trade. And here you have the breakage of the neck. Other thing I really like about this particular trade, this is a 1-minute chart, but when the bar is solid, this is obviously clearly bigger than most of the previous, 5 or 10 bars. It's also very strong. There's not a huge wick to it and then drops back down. Those tend to be really good. And I'll show you the results here in a second. But so that would be the break. And you can see that blue arrow here, the blue up arrow right there is indicating that I bought there. And then that blue arrow that's horizontal is my entry. So in this particular account, that's where I entered. Now, on a inverse head and shoulders in this particular case, it broke it. Your distance, the idea is it should go from the head, which is say 130, 35,000, 130, to the neck, or to the first neck, or the largest area. In this case, it's the neck up here, which is 258. So roughly, we're going to call it 130 points. I'm never going to go right for 130. I'm always going to be less than that. I don't want to try and squeeze out the last, 5 or 10 points. That's just me. So, but it would be a win or loss based on that. So here would be the breakout. You can see my entry. The stop I would have is you have a stop below the right shoulder. So if it gets below this right shoulder, it's a loss and it's done. But in this case, my entry is say 210, and the left, or this right shoulder here, was say 175. So 35, we'll call it 40 points. You want to be a little lower, so say 45 points. And your target is like 130. So you got well over 2 to 1 as far as reward to risk, right? So nice reward to risk ratio, and then you can see it trickle up, and then you'll see an exit, a first exit. So I had multiple contracts on this, and anytime you see a white bar here, that's me exiting. So that white horizontal one is exiting one there. So I entered probably about 212, exit around 256. So 45 points or so. For whatever reason, I exited some there. And then I exited, so the target would have been, in this case, 130 from this break. So, 340, it's basically saying, hey, this is going to go up to 35,340. I took some at 307, and then eventually got up to the 340. So that's a good example of it. That's kind of the process that I look for. So your shoulders and necks are going to change, and then once you have the things established, you look for the break, and again, the risk reward should be pretty good. So hopefully that was helpful in kind of doing it and breaking it down. Again, this is roughly 11:30 a.m. Eastern, and then it breaks around 12:30 Eastern, and this is on August 9th if you want to look at it in your own charts. And then tomorrow I'll have a video for you about another example that I placed as well. Have a good one.